From the morning reading, small caps lead again as rally continues. 7 of 9 sectors moved higher and 1 was unchanged on Wednesday. XLE, XLI, and XLF were the strongest sectors, while XLV was the weakest sector. Oil futures fell 4 cents to close at $34.69. Breadth strengthened as advancers led decliners 3.19 to 1 on the New York Stock Exchange and weakened on the NASDAQ, where advancers led 1.53 to 1. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:15 a.m. Central Time, and I'm recording this in preparation for the market day of March the 4th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive into the key highlights of the morning report. And pretty flat, and frankly, this is what you usually expect the night before one of the most important reports on the macroeconomic calendar, and that's the monthly employment report. Markets usually go flat leading into that report as people wait for that important news to come out and kind of act after that. That, of course, will be at 7:30 Central Time this morning, and that will likely define what happens with the price action of the day. S&P futures at the time of this cut were up 3.5 points, or about 0.2%. Russell futures were scratch. NASDAQ was up about 1/3%. Dow was up about 1/5%. Crude oil is up about 0.5%. Euro's up about 1/4%. Bonds are at scratch, and gold is up about 1%. So gold was moving in the overnight. In overseas action, you have China up about 0.5%. Japan up about 1/3%, Hong Kong up a little over 1%, Germany a little less than 1% up, and United Kingdom up about 0.75%. Everybody positive last night. In terms of macroeconomic reports for today, as we mentioned, you have that monthly employment report. You also have trade balance. So some very, very important activity coming out at 7:30 Central Time. You see all the red flags here. That should tell you something. So in terms of volatility, we continue to be relatively benign. Short-term VIX down below a 16, though the VIX futures are still just above an 18. So you see the difference there between the regular VIX futures and the short-term. Short-term getting pretty compressed and is coming down into the lowest levels it's been really probably all the way since last summer. Skew, for the first time, rears its head up over 125, which is our warning threshold. So we're now looking at about a 9% probability of a 2 standard deviation move within the next 30 days. In terms of IV percentile, all very, very low. Again, another sign of compression. On the S&P, it's a 22, the Russell 21, the NASDAQ 26, and the Dow a 20. In terms of standard deviation moves yesterday, we did have one put in by the Russell, and you look at this price action in recent days on the Russell, a 2 standard deviation move, followed by a 1 standard deviation move, followed by another 1 standard deviation move. The Russell has been on fire of late. It was at one time the weakest of them all, and it's made up a lot of ground, and indeed has been up since the bottom of about almost 3 weeks ago now. It has gone up over 130 points with nary a single pullback. There's been 3 red candles in that length. Let's go ahead and go to the chart and just look at that. It's a pretty amazing thing to see. In fact, my wife is doing a study right now looking at the historical context of this move, where you have a bottom and you've gone some 130 plus points. You've had 3 red candles, but they're all inside candles. See, the price action, you did not close below the low of the prior day in all 3 cases. So we've had nary a pullback of any significance whatsoever. It has been straight up in a 3-week period. And you see in the most recent days there, the kind of price action that you've had in 2 standard deviation move, 1 standard deviation move, and 1 standard deviation move. Big movement here. Now it's cleared all the near resistance. It's part of what's happening now is once it cleared this area, it's kind of up in clearer air. Now it is within the cloud here. It'll be even more significant when we get a big confirmed close above this cloud. As you can see, it's about to run into some historical, and it's back off the chart here, but about to run into some historical resistance area. So we'll see where that goes. In terms of the S&P, and you see it continues to clear out of the area, though the candles have started to get a little bit smaller, but not terribly. We certainly have not seen a reversal sign as of yet. We are coming into a zone not that many more points away where we have significant resistance right here in this 2000, 2010 area roughly. That's on the S&P futures, but so the numbers are probably slightly different here. In fact, it's probably more in line with right where it came to, the bottom of this cloud. Look at that. That is not a coincidence. That, you know, I love it when I hear people say markets are random, and I just want to laugh in their faces. But that's not a coincidence right there, that it comes practically to the tick to the bottom of that cloud, and that, you know, halts the activity for yesterday. So anyhow, bottom line to it is we're starting to run into an interesting zone where these markets are going to have to really make a statement. Now, what makes that statement? Well, often it's the energy that's generated off of a large, important report, such as this morning's employment report. So we could see two different outcomes on the day. One is that there's enormous amounts of energy that comes off of that report, and we managed to jump the creek, as they call it, and move through that resistance zone with nary a pullback. That is one possibility. The other possibility is that is significant resistance, and even with that report, it proves to be strong resistance, and we pull back off of that area. And then, of course, the other option is that the report is a poorly welcomed report, and then the market takes a retraction from that information. Now, in recent days, we've seen some interesting results with the macroeconomic reports with respect to how the markets react to it, and it's been the proverbial bad news is good news and good news is bad news. Everything is being couched in terms not of what's good for the economy so much as what is the news likely to do with the Fed. And everybody wants to see the Fed not increase the interest rates and continue to potentially bring in quantitative easing measures. So the proverbial bad news is then welcomed as good news, and the market responds accordingly, even though the news itself is not that reflective of a healthy economy. So very, very strange times we're in right now with respect to these reports. So very hard to read, you know, what the market's going to do as it digests a report, because it could take it either way in its reaction. You see the NASDAQ also, look at this, right up to the cloud, and has kind of stalled there for the last 3 days. So obviously running into some resistance with respect to its action. And then the Dow, oh, I think we looked at this one already. And let's take a look at the volatility. Volatility, of course, has been coming down substantially and is now broken down in terms of closing in on that 18 level. And you see we've had significant support in this general 18 area, and then the general 15 area on a shelf below that. So significant support for volatility coming in, but we're not quite really there yet. So volatility has a little bit of room to continue to come down. Bonds have been in something of a reversal in recent days, and including Last night's activity continues to come up, which is normally an inverted relationship with the equities. And then gold is look at this. Wow, isn't that amazing? We drew that pattern there several days ago, and it just blew out of that big time. And look at that, it even broke out through the horizontal breakout. So you had both a diagonal breakout and a horizontal breakout of that pattern, all in the same closing candle. And then yesterday actually this would be last night managed to have a new high, though it's backed off. It's still green for the day. So pretty amazing activity here by gold in the last few days. I think that's probably enough for the charts right now. Let's go ahead and go to the daily report. We'll continue to see healing going on in the daily report. And remember, this is a market first principle. I really like that phrase, recently picked that up. We start first and foremost as we construct our strategies and our holdings and our positions of what we want to be in, with the concept that we understand what the market is telling us in terms of market posture and risk levels, and that is first and foremost, we want that tailwind behind us. Well, in terms of that tailwind, what is that on the big picture? Well, the market trend intermediate term phase opinions, phase 4 right now, price patterns near horizontal resistance. This is a bullish type of pattern that can last potentially several weeks. So that certainly is a positive. IBD has our portfolio investor posture at confirmed uptrend. Accumulation distribution still poor, but these have been improving. In fact, the S&P with yesterday's action went to a C-. So we continue to see that breadth that was so narrowly focused on defensive areas has been moving more and more into those higher beta areas. GMI index still stuck on a 4 out of 6 with a sell signal since 1210, though that author has started to invest some of that money, so no longer 100% in cash in that situation. Decision point scoreboards, no changes yet. We're still watching to see how this stack comes together. Is this just a short-term counter trend against a long-term bearish market, or do we start to see more significant developments with the intermediate term starting to turn bullish as well? That would be the signs that this thing has some real legs to it, and we're starting to move the stack into a green stack as opposed to being so mixed. Right now, the expectation by decision points is that this short-term rally will come to a failure point and then roll down and establish a lower low. So it's very much a mixed picture when you look at the combination of these signals, and that's what you get when you have a market in transition. Though we have broken through the lower level of the range into an upper range, we're still in a relatively large range-bound market that goes back over 1 year. In terms of position sizing opinion, this is fairly healthy, 100% and 75%. So very supportive there. Also supportive is the intermediate term market forecast for the posture. Very strongly bullish on all 4 indices. All 4 now up over 90. So that certainly says something as well. We do have a weak bullish sentiment line, so that is supportive, though needs also to heal and bring along. And in terms of the intermediate term trend and how strong it is, you can see also here a very, very weak bullish trend from this signal. In terms of hedge warning status, we retain the 0+ normal with some cautionary risk aspects. And certainly we've been seeing that as we've gone through the report. In terms of special opinions, no changes from yesterday, so I won't read through all this, but bottom line is that for novices, option income strategies are borderline acceptable. We're still up over 18 on the VIX futures. Consider reduced position size. Consider that you're likely to have some volatility, which will create more than normal and larger than normal delta and vega moves. That is very much part of the prediction right now, and you've got to be ready for that with your option income strategies. In terms of special warnings on the smaller plate, we had the VIX futures, we have the skew, we talked about both of those. Everything else is very strong. New York Stock Exchange over 1,000 new highs on the 1 month time period yesterday. In terms of sentiment indicators, we are overbought on a number of these. In other words, the sentiment indicators are going pretty high, pretty extreme in some cases, especially the equities on a short-term basis. And in terms of particular ETFs, these are the most extreme on the sentiment readings, so kind of keep that in mind. If you have holdings here, you might want to start watching for those reversal patterns. Fear and greed index also getting pretty high, though not extreme by any measure yet. We have room to move up a little bit more, but we're starting to run into the situation where, as they call it, the pot odds, there's not as much room to the top as there is room to the bottom. And so it's getting to be more difficult to initiate new positions until we clear an area again. In terms of sector-specific metrics, these are the ETFs that currently have intermediate term bullish posture. So materials, industrials, and that's what we're talking about, where the blend of higher beta stuff is starting to come into place and join the number of more defensive holdings that have been in place for a while: consumer staples, gold, utilities, and the 20-year bond, TLT. And as we look at the market posture of the sectors themselves, we see a sea of green here on the short to intermediate and starting to bleed up into the long, and starting to also see here that mixture of defensive holdings and more high beta type holdings coming together. Percent change, energy, financials, industrials, and then utilities. So again, a mix of the kind of higher beta and lower beta, present in the top four. Now I think that's probably enough for today. Let's see here. Well, I think the thing I wanted to share with you a little bit today is about our covered call mastery course. We've just about finished one of our courses. We've got one more live class, and then we go into the lab practical. And what am I talking about with that lab practical? It is indeed a course that allows us to have both the classroom instruction, and this next course we're going to actually have, and I've got 4 here. This is actually going to be 5. It's actually going to be starting on July the 16th, and we'll follow on for 5 additional Saturdays for 24 hours of instruction in the classroom setting. But then there's this lab, and we have, as part of this course, these members have access to our live trading chat room, where we'll actually model these trades during the series of cycles. So 6-month follow-on membership to that trading room. That's all part of it. If you're in the greater Chicago area, and we have people who drive in from the region for this class, we'll be holding this class in a western suburb location, and this is on Saturdays again. But if you're not in the Chicago area, you can still participate. We'll be simulcasting and recording everything, so it certainly is easy enough to do that. So my wife just handed me something about this Russell, by the way, and I'll probably have to share this again on Monday since we're at the very end of the video. But interesting enough, the thing was, I asked her to look at when's the last time we actually went 130 plus points, and without a retracement, and you have to go all the way back to 2013 where we went 114 points with a similar pattern. So that tells you just how unusual this current move in the Russell is very, very unusual. So very interesting information there. So back to what we were talking about with this cover call mastery course. If you think you'd like to check out the details on this, go to this website here. That'll give you a complete course description. If you find that you are interested in this, send me an email to steven@falconglobaltraders.com. And with that, I'll put you on the wait list for information as we get closer to the course, and we'll nail all the details down and set up a registration. So that's the cover call mastery course. The second time we'll be offering that course. And then of course there's other offerings. If you find that you want more information about any of these, just hit the pause button, go to that hyperlink, and you'll get additional details. Disclaimers as always, hit the pause button if you need more time to review, and you see the hyperlink at the bottom for the full set of disclosures. We'll see you back here on Monday morning for the Falcon Global Market Preview.